Panic selling right now. Warren Buffett, $28.7 billion worth. I'm going to break that all down for you and explain exactly what's going on right here and now. You came here for the truth, so let me unveil that for you. I've got a big message today. It's all about what's happening inside the stock market. Yes, we can look at the consumer. Yes, we can look at the economy, but we can get some information pulled from Warren Buffett and other investors out there when we look at the actions that they're taking. I'll break that all down for you right here and now. Warren Buffett selling $28.7 billion in stocks. That rings alarm bells over the economy. Now, we know what's going on in the real economy. Obviously, inflation much higher than what they're willing to admit. But what does this say about what's occurring right now? That's right. The real economy is showing a very different world than what's happening in the stock market. The stock market is looking fantastic. I pinpointed the bottom of the stock market over 1 year ago, telling everybody what they need to know. Look, this is happening. This is the reason why. I followed up about a week or two later, again, making the same mention. And it is very clear now, looking back a year, it all made sense. Many people weren't paying attention to me as a result of everything. And look, you can see it, take it for what you want, but I'm telling you right now, when you see the money mirror method, which I've talked about numerous times here on this channel, and everybody on the fun Friday live sessions that we have get to know all about it. This is an important thing because it's a signal. And when we start to break that down, as we will do here, you're going to make sense of it. I'm just trying to help you out because of what I can see. People are so confused out there because these YouTubers are actually actively flip-flopping so fast you can't keep up. So here on this channel, I stick to the basics and always the fundamentals of what's been happening. And we have easy monetary policies. And certainly that has skewed everything. What's Warren Buffett doing? Well, he's selling $28 billion of stock. Look, even for Warren Buffett, that's a lot. Just to give you a little bit of insight, the guy is sitting on $157 billion of cash. Well, really, that's cash equivalents, right? Cash equivalents, think about it. If he's going to earn 5% on something like a US Treasury, and he has the option of, okay, or let's buy some of one stock or another. He's going to say, I can guarantee 5% here, or I can take the risk of what? A few percent, 5%. Is it going to be 7%? Well, the prospects here are very important to understand. Never lose money. Rule number one. And so he says, yeah, I'll take the 5% over that. And you see his track record, not just over the last few years, not just over the last decade, but decade after decade after decade. So he knows what he's doing. Now, he's going to invest differently than somebody else, but his method have been working here all throughout. And what is it? It's all about the perceived value of a company at some point in the near future. What are they pulling through right now? Are they able to actually bring in cash, bring in capital, and make their shareholders happy? What Warren Buffett is signaling is that next year, 2024, is not going to be strong. That's for sure. He's signaling in his own way that a recession is coming. Warren Buffett likes to take a look, as they say in this article here. He would rather be sitting on this cash because he can earn that money, but more importantly, be ready to deploy massive amounts of capital because he's considered to be the lender of last resort in these certain uncertain times. You know, you may be already aware of this, but during the financial crisis, the whole, you couldn't get money, you couldn't get a loan. It was not going to happen, whether that's for real estate, whether that's for businesses. Companies were going bankrupt. All of these things were happening one after the other. And you had this tightening of credit. So would you believe it that Bank of America and other companies that happened at this time would go to Warren Buffett and others? They would say, these are the circumstances. We want your investment. And in that case, he took it on, of course, and the rest is history. But there were companies that would approach him and he would turn them down, saying, no, this is not viable. So you got to realize this. He's ready to deploy, but he wants to buy for pennies on the dollar. He doesn't want to buy at the most inflated prices ever, at the highest prices, all-time record highs. That's generally not what he does. I mean, he does accumulate here and there, but when you've got this amount of cash, he wants to do it all at once and buy entire companies if he can. So that's the difference between a Warren Buffett approach and the average investor. You could take the approach you decide, but let's learn from what he's doing. And it's not just him. By the way, if you want to know what guys like Warren Buffett are doing at any time, I made this video many, many years ago. It's how to find exactly what stocks big investors like Warren Buffett are buying. You could just type that in, and it's also under my playlists. You go to my main channel, the Money GPS, scroll down to the bottom under the playlist called Easy E-Course, click on that playlist, and that's the video in there. It's also in the link in the description under the sources. So what do we have today? Like what's going on in the stock market? And what does that tell us about the economy? This is important, even if you're not an investor, okay? So you got to pay attention to this. Look, and by the way, if you share this with your friends who, claim to know about stocks, please do, so they can understand what's going on here. If they're looking to invest, if they're talking about the stock market, these are the things they need to know. So you will see this at this time on the right-hand side. There's single stocks, and there is essentially the ETFs of the broad market. And people right now, they're investing broadly in the market versus single stocks. That's not happening now because they don't want to be stock pickers. They don't want to take risk. They just generally want to be putting money into the market. And we have this IWM, which is essentially looking at small caps, smaller companies. And there has been a lot of, let's just call this, risk taking, because these are options. And they're buying more than ever before. This is a record high when we look at the small caps. And generally that's seen as being, higher risk, not the large caps, the small caps. Well, what has happened over the last while has been that the Magnificent Seven has taken everything. All the money has been flowing into the Magnificent Seven, the tech stocks, right? They've been getting all the money. They've been getting all the attention. And now perhaps that has started to flip to a small degree anyway. But this is what's going on. And I'll tell you why. We're going to explain why that's the case. If you hang out with me for just a few more minutes, I'll tell you why small caps have been seeing some interest right here, right now. If we look at the markets broadly, you can see that they've been going up with the anticipation that the Federal Reserve is going to cut interest rates. You've seen that, right? I'm sure. But that would mean that everybody at the Fed is wrong, because that black line there, that is the anticipation of the market. But look at those yellow dots that are, circled in red there. That's where the Fed, the FOMC members, that's where they are saying in 2024, the Fed funds rate will be at. And so that black line is completely different. So the market is saying, no, you're cutting interest rates. And the Federal Reserve is saying, we're not going to cut interest rates. And we know specifically that the Federal Reserve is never going to actually tell you. They're not going to say, it's a recession now, so you get better panic and you better go sell everything. They've never done that once before. So we have to take what they say with a grain of salt, just like they were saying inflation is transitory and all that nonsense, okay? So I still can't say that without laughing. So keep that in mind. Now we have this S&P 500 seasonality from 1950 through 2022. And it is during this period of time that we see bullishness. We see more money being thrown into the markets all throughout end of the year. This Santa Claus rally, a lot of times is basically like right after Halloween that we would see more money coming in. Looking at it as well, Russell 2000 versus the S&P 500. That's the small caps versus the S&P 500. Seasonality since 1980. Russell 2000 outperforms. Okay? So understand what we're seeing now. Seasonality of the stock market overall, but also comparing the small caps to the general market, S&P 500. And you do see that the small caps tend to win. There is, this is all, I'm connecting all the dots together here, and hope you can see that. And I hope you do appreciate it. If you do, all you got to do is hit that thumbs up button, because number one, it supports the channel, but also it notifies the algorithm out there that, hey, this is some good stuff. So it will push that into other people's feeds. I want to thank you for doing that. Isn't this interesting though? The way that this all works, there's the seasonality, there's the comparison of the different markets, and you could see what big investors like Warren Buffett are doing. So it's very important stuff. At the same time, we have this S&P 500 performance around the start of the Fed cutting cycles. And so if there is a recession, yeah, you've got a problem. Depends on what it is. Is it a financial crisis, tech stocks, boom, bust, all those? Then the stock market can come down. But the median of all episodes tends to be that once they start cutting, there's a little bit of turbulence here and there, but eventually markets come up afterward. And we know that it all depends on what that catalyst is. We want to wait for a catalyst. Is a banking crisis? Is it suddenly a bust in the stock market? Like, these things matter, but at some point they're going to cut. There's going to be some sort of bailouts. We have seen this before, and as a result, risk assets usually end up doing better. 12 months, 24 months out from that period, it usually looks like that. But in that bear market, there's a lot of people that lose their shirts, especially the ones that are taking on too much risk, too much debt. So the message here is we are at an all-time high. You have to be aware of that. You have to trim your winnings, and you have to start to realize that, okay, I don't want to be greedy at this time. I'm going to put some capital on the sidelines because I want to deploy, but I'm not at the same time going to go and just sell everything, because that's a risk as well. You have to have a balance. Very important stuff. And a lot of people don't want to talk about that. It's not sexy. Hey, I think it's good, but what can you do? And then you look at it, across the ocean, and we see what's going on inside of China. You could see what's going on with Hong Kong. Looking at this, a historic slump in Hong Kong's $4.6 trillion stock market is rippling through the city's financial industry. Check it out. You've got stock brokerage, local brokerages closing down. This is a record 49 shut up shop in 2022. Again, over and over and over again, money is fleeing. I have the charts right here. You could see the stock index heading for a record 4th year of losses. And it's getting worse. Look at the trend there. It's not a good sign. And some would say that China is becoming uninvestable for foreign investors. That's what they're saying. But, usually when it's like that, it's always the opposite that happens. Hong Kong stock market is fading versus Japan's. And Japan, how terrible their circumstances are. I don't even know how they're still standing. But that's the way it goes. And so I just wanted to make it clear, the money has left certain areas and found its place in others. And the US has benefited from that. They benefited from the strong currency, and they had benefited from the treasuries. As a result, people put in money in. Hey, 5%, why not? So money has generally been flowing in that direction, and people are concerned about what's happening in China. China is trying to get foreign investment back and going, and we could see right now the struggle that they are dealing with. If you want to know about what's going on with particular stocks, you're like, I don't know what to choose and this and that. That's why I partner with Seeking Alpha, because Seeking Alpha can give you details that you just do not find. Like, don't compare their general website. That's not a good way to do it. But their paid subscription is actually really good. You can see that this is called their alpha picks, which they have. And on the right-hand side, they show the performance vastly outperforming the general market, which has done very well, of course. And you could see it. It's almost 60% versus the S&P 500 at about 22%. So if you're interested in that, you just basically go to the link in the description, click on that, and it will bring you to the page. You can see for yourself there is a discount that's always running over there, and what they decided that, by the time you're watching this video, you'll get a discount on that product. So just check it out. It's definitely worth it. I would say for those who are really looking towards investing, then you should be more informed than what we have available out there with, a lot of misinformation. The comment of the day, I want to thank you for that. I work at the Mayo Clinic, and we had AI start to work alongside of us 5 months ago, and it was way off in its decision making back then. 5 months later, and it's unbelievably accurate now. I would be shocked if job cuts aren't happening within 6 months. So thank you for that comment, and I just want you to understand that there are disruptions that are going on, and you need to be aware of them. I hope that you will stay in tune with this channel, because I'm going to bring you the latest and greatest information. Make sure that you tune in every day. Make sure you come back, go to the Money GPS. Make sure that you seek this channel out. Probably won't end up in your feed, but I want to thank you for being here today, and I hope to see you tomorrow. Take care.